Well, on the campaign trail, President Trump promised Americans cheaper fuel and energy dominance. For the U.S. 1 year into his term, oil and gas prices have dropped, but high electricity costs, cautious energy investors, and cuts to renewable incentives show that achieving all three energy goals simultaneously may be far more complicated. Our next report breaks down the conflicts and contradictions in Trump's energy agenda. Take a look.
On the campaign trail, Donald Trump promised two things on energy: cheaper fuel for Americans and U.S. energy dominance. 1 year into his term, gasoline prices are down nearly 10% and U.S. oil prices are about 20% lower than a year ago. For consumers, that's a win, but those same low prices are discouraging new drilling. The number of active oil rigs in the United States is down more than 6% year on year. With crude prices below $60 a barrel and global markets oversupplied, producers say expanding output simply doesn't make economic sense, despite a friendlier federal policy environment. Even as drilling slows, U.S. energy exports are surging. Last year, America became the first country to export more than 100 million tons of liquefied natural gas, with Europe taking over half of those shipments after cutting reliance on Russian gas. Sanctions on Russia and pressure on major buyers are also helping U.S. crude gain global market share, but oil and gas companies remain cautious. Global upstream investment fell last year and is expected to decline further in 2025, including in the United States. After years of boom and bust cycles, capital discipline, not rapid expansion, has become the industry's new normal. While oil and gasoline are cheaper, electricity bills are moving in the opposite direction. Natural gas prices, a key driver of power generation and home heating, are up more than 50% from last year's average. Wholesale power prices have risen sharply, up over 60% in parts of the Northeast and about 45% in the Mid-Atlantic. Analysts say higher fuel costs, grid upgrades and disaster-related expenses are pushing prices higher. At the same time, Trump's rhetoric on renewables has severely impacted green energy companies. Cuts to renewable energy incentives and uncertainty around wind projects could limit future supply. The result is a growing contradiction: affordable fuel, rising power bills, cautious producers, and three energy goals that are proving difficult to achieve at the same time. Business Bureau WION, World is One.